Sir, we are live now. You can start the proceedings.
Good morning, esteemed shareholders and guests. I am Rikin Kumar Dalwadi, Company Secretary and Compliance Officer of the company, joining you from Vallabh Vidyanagar. I have great pleasure in welcoming you all to the 51st Annual General Meeting of EIMCO ELECON India Limited. This annual general meeting is being conducted electronically via video conference in accordance with regulatory provisions and the circular issued by the Ministry of Corporate Affairs and the Securities and Exchange Board of India. As you may be aware, the MCA has permitted companies to send annual reports and notice of the AGM electronically. Accordingly, the annual report has been emailed to all the shareholders whose email ID are available with the company and the registrar and share transfer of the agent or depository participants. For the shareholders without registered email IDs, a letter containing the direct link to access the annual report has been sent. As this AGM is held electronically, proxy procedure have been dispensed with as mentioned in the notice. Before we begin, a quick note that the access to the meeting is on first come first serve basis. All the participants will be muted by default to ensure smooth proceedings. We have a few registered speaker shareholders who will be addressed later in this meeting. In addition, if any shareholder has a question, we request you to please type it in the chat box. All such questions will be taken up during the question and answer session. All the speakers must be conscious and restrict themselves to the matters listed in the notice of the AGM. After questions have been answered, the meeting will be concluded. It may be noted that the company reserves the right to limit the number of members asking questions depending on the availability of time at the AGM. We appreciate your active participation and look forward to engaging and fruitful discussion. For any technical assistance during this AGM, please refer to the helpline number provided in the AGM notice. I would like to take this opportunity to introduce our esteemed board member who are joining us virtually. Mr. Pradeep M. Patel, the chairman of the company, as well as chairperson of Corporate Social Responsibility Committee, joining from Mumbai. Mr. Mukul Narayan Dwivedi, executive director of your company, joining from Vallabh Vidyanagar. Mr. Prayashin B. Patel, executive director of your company, joining from Vallabh Vidyanagar. Mr. Prashant C. Amin, non-executive director of the company and the chairperson of Stakeholder Relationship Committee, joining from California, USA. Mr. Venkatraman Srinivasan, independent director of the company and the chairperson of the audit committee, joining from Mumbai. Mr. J. S. Divanji, independent director of the company and chairperson of nomination and remuneration committee, joining from Mumbai. Mr. Sunil C. Vakil, independent director of the company, joining from Vadodara, and Dr. Sonal V. Ambani, independent director of the company, joining from Ahmedabad, and Ms. Manjula Devi Shroff was absent today. Additionally, Mr. Vishal C. Begwani, Chief Financial Officer of the company, has also joined us from Vallabh Vidyanagar. And we also have with us our statutory auditor, Ms. Neena Shah, partner of KC Mehta and Company LLP, with her team from Vadodara, joining us from their office in Vadodara, and our secretarial auditor, Mr. J.J. Gandhi, proprietor of Messrs. J.J. Gandhi and Company, who is also joining us from his office in Vadodara. As you know, the company has partnered with MUFG In Time India Private Limited formerly known as Linking Time India Private Limited, to provide e-voting facility to our members in accordance with the Companies Act 2013 and rules framed thereunder. Members were given remote e-voting facilities from 22nd June 2025 till 24th June 2025, and thereafter remote e-voting was disabled. For those for the members who have not yet casted their votes, e-voting facility is also available during this meeting. You may access the InstaMeet e-voting platform and submit your vote while viewing the proceedings. Please note that e-voting facility will remain open for 15 minutes after the conclusion of this AGM, after which MUFG in Time India Private Limited will close this voting platform, and Mr. JJ Gandhi, practicing company secretary, has been associated as an scrutinizer to ensure the entire voting process is conducted fairly and transparently. He is joining us virtually and overseeing the process in real time. The combined result of remote e-voting and e-voting at the AGM will be communicated to the stock exchange, that is BSE Limited and National Stock Exchange of India Limited, and will also be published on the company's website and MUFG In Time India Private Limited's portal within the prescribed statutory time. As the requisite quorum required for this meeting is present, we can now proceed with our AGM. I request our chairman, Mr. Pradeep M. Patel, to address the shareholders, please.
Thank you, Ricken. As a requisite quorum is present at this 51st annual general meeting, this meeting is called to order. Dear shareholders, ladies and gentlemen, a very good morning to everyone. It is my privilege to welcome you all to the 51st annual general meeting of your company. We have circulated the annual report for the financial year 2024-25 to the shareholders, and it is also available on the website of the company and on the stock exchanges. It is an honor and satisfaction for me to address you and share the performance highlights and achievements of the company during the financial year 2024-25 and its future outlook. EIMCO ELECON's performance at a glance. I am pleased to inform you that our company is committed to serve the nation by providing indigenously developed and manufactured equipment for coal, metal, and construction industry. The company has achieved a revenue of 246.47 crores during the financial year 2024-25, which shows an increase of approximately 8.34% as against 227.50 crore rupees for the previous year, 23-24. Our equipment demand largely depends on the underground mining production, especially coal. Intermediate technology equipment continues to be the backbone of the underground coal mining production, with more than 60% of the total underground coal production being met by side dump loaders and load haul dumpers. We continue to be the leading player in this segment. As we are witnessing shift in demand to blast-free technology, we are gearing up to address this shift. During the current year, we have developed and supplied feeder breaker to our customers. With this, we are ready with the entire offering of the continuous miner package. Now, in the coming days, the focus is to establish the performance of these equipments. For underground metal mining sector, our bigger size load haul dumpers of 7-ton and 10-ton capacities have been established successfully. We are also growing rapidly our product line in this segment. Moreover, we are currently in the process of developing new products for construction, including additional models for our piling rigs, tailored to meet specific market demands of small and large piling machines for various applications. Additionally, we are advancing the development of diaphragm wall machines, further expanding our product portfolio to offer innovative solutions to our customers. We are fully committed to our environmental, social, and governance responsibilities. The company also undertakes CSR activities with help which helps in improving livelihood, promoting education, and support for health treatment and wellness of the society. We wish to inform you that Sandvik Mining and Construction OY, formerly known as Tamrock OY, Tamrock Great Britain Holdings Limited, the BP Group, Elecon Engineering Company Limited, EIMCO ELECON Limited, and other Sandvik companies have entered into the termination agreement on 23rd April 2025 to terminate the agreement dated 28 February 1992 and supplemental agreement dated 11th August 2011, which is called the Shareholders Agreement, which govern inter se relationship and the rights and obligations as shareholders, promoters of EIMCO ELECON with respect to the operation and management of EIMCO ELECON and all other arrangements and contracts existing between the Elecon Group and the Sandvik Group and other matters in connection therewith. The company has received the information regarding the review of strategic plan of Tamrock Great Britain Holdings Limited, who are the promoters, in relation to the shareholding in EIMCO ELECON India Limited on June 4, 2025, which has been informed to the stock exchange. During the year under review, your directors have recommended a dividend of 50%. Economic environment and future outlook. India's economy is projected to grow at 6.5% in the financial year 2025-26, as per Reserve Bank of India's latest monetary policy committee meeting held in June 2025. Also, nation's growth will be supported by capital spending and rural and urban demand. Despite global headwinds and geopolitical tensions, India continues to assert its role as a structural growth engine in the global economy. Our long-term fundamentals of our industry remain solid. Despite the increasing thrust on development of renewable energy sources, coal will continue to remain the bedrock for India's energy metrics for the time being, given its domestic availability as an efficient engine. While the contribution of the underground mines to the total coal production is currently less than 4%, government has taken various positive steps to unlock the vast untapped potential of the underground mining in India and increase the share of underground coal production to 10% by 2030. The outlook for the mining equipment industry is very positive for the next decade, with India posing for big dream Viksit Bharat 2047. The outlook for construction equipment in India is also promising. Companies like EIMCO ELECON investing in sustainable, smart, and localized production should have advantages. Corporate governance. At EIMCO ELECON India Limited, we remain steadfast in our commitment to the highest standards of corporate governance, transparency, and ethical conduct. Over the past year, we have further strengthened our governance framework. We have maintained an independent, diverse, and experienced board of directors that provides robust oversight and strategic directions. The philosophy of the company in relation to corporate governance is to ensure transparency, disclosure, and reporting that conform to the provisions of the Companies Act 2013, SEBI, LODR, Regulations 2015, and all other applicable laws, rules, regulations, and guidelines. Before I conclude, on behalf of the Board of Directors, I wish to convey my sincere regards and deep gratitude to the valued stakeholders for your ongoing support and belief. You always have been the motivational force and have felicitated us to move ahead and achieve the excellent results during the year of both challenges and achievements. I would also like to thank my fellow board members for their guidance and stewardship. To all the employees and workmen at all levels of the company for their hard work, adaptability, commitment, and support. I must also thank the banks, suppliers, and valued clients for their wholehearted support and cooperation extended to the company during the year, and I'm sure would continue to do so in the future. Together, we will continue to build a company that is innovative, resilient, and responsible, that create value for its stakeholders. Thank you.
Now, thank you, sir. The notice dated 23rd April 2025 convening this meeting, along with the copy of annual report for the financial year ended on 31st March 2025, has already been circulated, and with your permission, I shall take the same as read. And further, there is no qualification, reservation, or adverse remark in the statutory auditor's report and the secretarial auditor's report of the company for the financial year ended on 31st March 2025. Hence, pursuant to the provision of the Companies Act 2013, the same may be taken as read. We will now take up the following business item as set out in the notice convening this AGM. The ordinary business set out in the notice for this AGM are: item number 1, consideration and adoption of audited financial statements of the company for the financial year ended on 31st March 2025 and reports of the board of directors, the board, and the auditors thereon. Item number 2, declaration of a final dividend of rupees 5 per equity share for the financial year ended on 31st March 2025. Item number 3, reappointment of Mr. Mukundaran Dwivedi, DIN number 08442155 as a director, retired by rotation and eligible for reappointment. The special business set out in the notice for this AGM are: item number 4, appointment of secretarial auditor of the company. Item number 5, appointment of Dr. Sonal V. Ambani into bracket D number 02404841 as an independent director of the company for a term of 5 consecutive years. Item number 6, approval of material related party transactions with MTC Marketing LLP. Item number 7, adoption of new set of articles of association of the company. Item number 8, ratification of remuneration payable to the cost auditor of the company for the financial year ended on 31st March 2026. These were all businesses that are proposed to be considered and approved by the members at today's AGM, which were put to vote through remote e-voting and e-voting during the AGM. We will now address questions from shareholders who have registered themselves as a speaker shareholders. So I request MUFG team to allow one by one shareholders to speak at the AGM.
The first speaker available with us is Pankaj Parul.
Riken, may I suggest that we have already received quite a lot of questions.
Correct.
And maybe it may be better because we have already prepared the answers in a consolidated form. So may I request the CFO and then the executive director in answering all of them rather than taking them one by one, because that will consume lots and lots of time. I may also wish to inform all the shareholders and all those present in the meeting that some of the questions we have received we may not be able to address because of the confidential nature of our product portfolio, as well as the regulatory requirement of RBI, SEBI, etc., etc. May we request you to excuse us for the same. And one of the major questions which I think everybody's asking, what is Sandvik going to do with their shareholding? At this point in time, we cannot disclose anything. It is up to them what they want to do. The intentions of the promoters cannot be disclosed either because of the regulatory requirements. And as and when this matures, we will keep the shareholders abreast of all the situation which comes to us from time to time. With that, Mr. Mukul Dwivedi and the CFO, Vishal Bhagwani, would you please address the other questions which are in a consolidated form? Thank you. Mukul, can you please go ahead and answer? So you received already so many questions. So many relating to the products, many relating to your future programs, etc. So briefly, if you inform, then the shareholders will be answered all the questions, because there are about 100 and some odd questions, which most of them pertain to the same 2 or 3 underlying topics.
Yeah, thank you, sir. And good morning to the directors and the stakeholders. Most of the questions highest number of questions are related to our continuous miner package. Therefore, I am going to sum up all the replies. Our continuous miner CM3500, that model which has been developed technically at par with any other competitors, continuous miner of the category available in India or the world. That has already been supplied to the customer. It has been dispatched. It has got all the DGMS permissions for the field trials, and that will start production maybe within few days, but that is in the customer's domain, that when they can deploy, but tentatively 2 to 3 months it may take. The other machine, the feeder breaker also, there are many questions about that, and that has already been supplied, and that also may get good for the operation within very few days, because 2 units have been supplied at 2 different locations. We will be adding more variants of the continuous miner based on the mining conditions, and we are geared up for any challenges for the continuous miner cutting system offerings. Many questions about the prospect. I will simply say that it is the Coal India, which we had repeated last time also, that they have estimated around 100 to 125 packages will be deployed in next 5 years, which I also feel that is possible. However, the last year, the number of packages deployed were not as per the target of our major customer CIL. In the marketing front, many of the questions, as the chairman sir has said, I will not be able to divulge our strategies related questions, and so therefore I will simply say that we are right now the only one-stop shop solution for the whole package in the country, or maybe second in the world. That is the advantage we are having on the market. There are questions related to the non-coal business also. We are expanding our product portfolio in that. Particularly the LPDT is planned to be launched in this year. In piling rake segment, we have launched the smaller machine, that is EC125. It is working successfully with our customer. And very soon the DWAL also will be rolled out. So I believe that I have addressed all these questions related to the product. There is a question related to the diversification also. Yes, we keep on searching the new products, new businesses for the diversification, even the new markets in India and beyond. So we keep on working on those, all the potential business for us, and we'll be informing you as we take some concrete steps. Thank you.
Vishal, would you please address any questions on finance and accounts? Is there any?
Sure, sir. So we made a summary of the questions which we have received. There are some questions related to the stake sale by Sandvik and the other promoters' interest. So far we have received a letter from, we had received letter from Sandvik regarding their intention to review their holding, and which we disseminated to the exchanges. Regarding other promoters intend to buy out, we have no such information, so will not be able to address in this forum. Regarding the question of on the cash in our balance sheet, so we have cash in excess of around 200 crores in our balance sheets, primarily into the liquid investments. Right now, as we see, the mining industry is going through a lot of transformations. We are moving from the intermediate technology to the blast-free cutting technologies. So a lot of investments we are doing in the working capital in the technologies. We are also developing products in the metal minings and looking for other diversifications opportunities. So as and when those comes up, this cash provides a much needed support for our growth journeys. So that we are reviewing, and that gives much needed support for the business. Now there were a few questions on the financials in terms of order book. We had order book of around 86 crore as on 31st March. Around split into continuous miner was 40% and 60% on the other products. Spares orders were little around 10%. Of course, for our growth, we are not full. These orders were fully going to be materialized in this FY26, and apart from that, we are not totally dependent upon the opening orders. We receive and able to execute within the quarters the new orders. There were some questions on the sales breakup. So last year, our equipment sales was out of the total sales, equipment sales were around 70%, and 30% was spares. So spares as a percentage in future, it may go down further. Within equipment, around 30% we realized out of the CM package components. About our other products, metal mining, construction, those contributed to around 20% of our turnover last year. The next one was we have received few questions on the margin expectations. So we expect our margin to be in the range of 18 to 20%. The gross margin with this new technology products, technologically advanced products, the gross margin we expect to be higher, but overall because of the increasing spends on the R&D and building the other support system, the EBITDA may we target to have in the range of 18 to 20%. Of course, the efforts will be to increase it further. About our tax rate, we expect to be in the range of 22 to 23% overall. There are some questions on the related party transactions. So we would like to state we are totally focused on our manufacturing and R&D strength. Our marketing efforts, we have an entity MTC where we have outsourced our marketing and service support. Our Akaish takes care of the plant and machinery repairs and maintenance work. We have Tech Elecon, which takes care of our all the IT hardware and software support system. So all the transactions are totally at arm's length and complying with all the norms and requirement of highest standard of corporate governance. MTC over and above. So all these companies over and above us, they also cater to various others. So it is not that we are able to totally merge them, because they are catering to various other entities, and we are taking advantage of their inbuilt marketing and group strength. Of course, in terms of inventory, we had last year there was increase in inventory because of yes, various developments, especially the CM inventory which went up. That resulted into increase in inventory to around 112 crores. Yeah, I suppose we have taken all the questions related to the financials. So if shareholders can has any further questions, they can let us know.
Thank you, Vishal.
Thank you.
Mukul, thanks a lot. I think you have covered most of the points, but however, as Vishal had said, that if you have any other questions, please raise your hand and you are free to ask. Thank you.
Sir, we need to call out the shareholders' names or not?
If anyone is raising, I think Saurabh Jain is asking. So, Himit bhai, Saurabh Jain.
Can't hear him.
Saurav Jain is with us.
So someone writing this raise hands not available. So those kind of we can.
Hello, can you hear me, sir?
Yes, we can hear you.
Yep.
Yes, sir. I had a few questions on the underground metal mining. So, I wanted to understand what is the current market share which we have, and can we expect this market to grow further as we have moved away with Sandvik for now? And you mentioned in past AGMs that there is a 500 machines cumulative of Hindustan Zinc, Hindustan Copper, and Uranium Corporation. Can you touch upon that, and what is the market every year, and what could be the market size? And what are the major products which are being sold, and who would be the larger customers in this area? The other question is related to the uranium business, uranium corporation business which we had. What was the exact number of equipments which were sold, and maybe you can talk about the further orders which can come up, repeat orders which can come up in uranium from uranium corporation, and if we are what is the market share we have in uranium corporation products. And also, sir, in the piling rigs, can you tell us about what is the price difference between EIMCO ELECON's products and the Chinese players, and how many piling rigs have we sold till now, and is it largely focused on the area where we are from, that is Gujarat, and are we losing market share to Chinese customers, or have we gained market share here? And also on the AWL loaders, wanted to know about the complete market. How is this panning out? Have we sold comparatively lower number of these loaders compared to what were 3 years ago? Maybe can you give us the number? And is there any repeat orders expected from MOIL? And you talked about in your opening speech about diaphragm machine. Can you talk about the market, and how this can pan out for EIMCO? Can it be a 100 crore business maybe 3-4 years down the line? These would be the broad questions which I have.
Now, Mukul bhai, would you address them, please?
Yeah. Saurabhji, the lot of questions I will try to remember and answer you. Number one, that we were not dependent on Sandvik technology for any of our underground mining equipment, which will get affected by their moving away from our board. So all the machines which we were selling, which in the underground mining, particularly in the metal mine, are developed by EIMCO ELECON on our own, and say no effect of their leaving the board. The other thing is that the market, the UCIL, we have sold directly 8 number of machine, and indirectly through the contractors, around 10 numbers of machines are working in there. And what is the prospect from them? Not very clear. That UCIL has to decide. But yes, they buy the machine intermittently. So that is the underground mining segment. The piling rig segment, devolve we are launching. It is having quite a good, say, potential. At this juncture, about exact quantity, quantity, I am not able to give to you that how many machines or how many crores worth business that is. But I can very well say that that will give us a good boost in our portfolio and enlarge our market share of the piling rig. Yes, there is a Chinese competition. The price difference naturally will be there, but we are selling on our strength of being a superior and technologically high product, and there are customers for the same also. So the market segment of Chinese and ours are little different. However, we are attempting to gain the market share in their zone. And many of the technical things you have asked and the exact number, I think those things, if they are not marketing confidential thing, I can inform separately to you. I do not have those numbers right now in my tongues. I believe that I have replied to most of the relevant questions you have asked for the business.
Thank you. Thank you.
Sir, many of them has sent a chat message, so they want to speak during the AGM. So we need to allow them one by one. So the first speaker is Mr. Pankaj Parab.
Hi, sir. Thank you for the opportunity. So my question is on the competition side. So as we know, there are some players are coming up and trying to come up with the whole package of the CMP as well. Yesterday only we have received some announcement for the ECL, so that they have deployed some of their equipments in their mine. So how do you plan to compete against such players and make sure that we are the only one who gets our market share in the CMP segment?
Again, Parabji, one thing is that there are competitors known to, and it is well known when we are entering into the business. There are marketing strategies. I have already told that we are the only one stop shop, and there are many other things. So means many other superiority in our offering, and believe on us that there will be competitors. They will be doing their job and will be gaining the market share. That is what I can say.
The next speaker available with us is Ayush Agrawal.
Yeah, good morning, sir. Am I audible?
Yes.
Okay, sir. Sir, 2-3 questions from my end. First, you mentioned that our continuous miner machine has received DGMS approval, and can you mention if any teething issues that our machines faced, or if any improvements that we need to do in our current platform to bring it at par with the competition, or do you think it is already established enough? And if that is the case, then can we start selling the entire package sometime this year in a very aggressive way? That is my first question. Second question is, sir, feeder breaker also that we have currently sold. If you can also mention how is the product performing, and if any improvements that we need to make. Third question is that to a player like JMS, who is gold standard in underground coal mining and one of the largest MDOs for Coal India, when can we sell the entire package to a player like JMS? Is what I would like to understand. Fourth question, sir, is that if we have to sell 6-7 packages a year, what kind of capex do we need to do? If you can answer these, sir, it will be very helpful.
Okay. First of all, I have said that we have supplied, but the continuous miner is yet to be deployed. So once deployed, almost all the continuous miner have faced the problem, and we are geared up for the same. We have got advantage of being local. However, I will inform you that even the people who are making continuous miner since last 70 years, their continuous miner face the problem due to the different mining conditions, different working environment, different people who are behind the machine. So that is very normal, and we are geared up better than anybody for the same. So same as with the feeder breaker also, it is yet to be deployed. It has got all the regulatory clearances for deployment, both the machines. We have already sold the whole package to our customer. So we are not waiting for the package order. We have already sold the package. It has gone as a package. And that has already taken place. The other thing is the esteemed customer, JMS. They are our regular and very old and esteemed customers. And we will be working with them. And definitely, I cannot set a time frame when they will buy everything from us. But I assure you that yes, we are highly acceptable to them in all our machines. Yeah, that's all. I think I have addressed all your curiosity about our machines and business.
Another speaker available with us is Keshav.
Sir, thank you very much. So only the major questions I'll repeat, sir. So what is the expectation for FY26 in terms of top line? And sir, you already mentioned 18 to 20% operating margin, but sir, last year we did 23% operating margin. So this year, even if we do 15% revenue growth as opposed to 8% revenue growth last year, our EBITDA will still shrink if we do something like 18-20% margins. So is that understanding correct? Or sir, are you expecting a higher revenue growth? And sir, also what kind of revenue growth can we expect for the next 5 years? Any broad idea you could give us? Sir, also if, for example, if 100 crore capex is made in underground coal mining, then what is the kind of opportunity that is created for us? Is it like 10 crore, 20 crore? Like what percentage of the total capex will come to us? Sir, and lastly, I wanted to understand that are there any plans to manufacture drilling rigs that are made by Revati Equipment and Atlas Copco? So these were few of my questions. Sir. Thank you very much and best of luck.
See, our growth is that means earlier forum also it has been informed that we are targeting around 15% growth every year in sustained basis. The profit margin we target 20%, but it depends upon the product mix, what exactly we are selling in the market. Different products have got different margins. So based on the total product what we sold and the share of the spares etc. affect that, and I believe 23 is more than we delivered better than our promise. The other question about this Pardon, I am just forgetting the question. Vishal bhai, can you remind me?
It
What
was regarding the drilling rig.
drilling rig right
Drilling
now?
machines.
Yeah, right now it is not on our drawing board, but we have got the capability to do that. But right now it is not in our plan.
The another speaker available with us is Aditya Agrawal.
Hi, am I audible?
Yes.
Yes, sir. Sir, my question actually pertains to the CapEx plan. If you could guide us on the current year CapEx plan and any planned investment. My second question is related to the order process. So we receive order from Coal India and MDOs. What are the key differences between these orders in terms of margin, scale, and complexity? The third question is of the 140 cm packages planned by Coal India, what is the projected order volume that we can secure? And the last question from my side is, so does Coal India mandate sourcing the entire CM package from a single supplier, or how does that process work out?
Yeah, so the for us, the Coal India is one of the customer, and there is no difference between a private customer and a Coal India as a customer. The our order execution process is the same for both the orders. Normally, the Coal India order goes by their budgeting methodology, etc. That is the only difference, and tender process, etc. As far as the expectation is, see, we have got the capacity to deliver 5-6 packages easily, and we would like that to be done continuously from whatever may be the market potential of the continuous miner. And we are quite confident that our manufacturing capacity, as you may be knowing that we use the manufacturing capacity of our group companies. So in total, when we say the manufacturing capacity, a lot of special skills and special facilities we use within our group companies. So those are all available at our disposal whenever we need them. So delivering is not a problem. And the last question was that whether the Coal India suggests total package to be purchased as one or not. So they are open on that. They do not suggest anything. It is for the customer that if they buy from one, they will get service support and many other advantages. So there is no such restriction from the Coal India right now. Maybe you are talking about one Make in India tender which has come from Coal India. So there they have asked for the package to be total Make in India, but suppliers can change within that package. Thank you.
Another speaker available with us is Aman.
Morning, sir. Just three questions remaining. Sir, first on the capacity which you talked about, 5 to 6 complete packages we can supply. So, sir, in my understanding, our continuous miner will still take maybe 1-2 years to be fully established in the industry. But meanwhile, we can supply at least different components like shuttle car and roof bolter is already established. So, if there is a demand, say for example, for 15-20 roof bolters,
Do we have the capacity to supply that in 1 year? Reason for asking this question is, sir, one of the pain points in the industry has been the delivery timelines, because a lot of these components get imported in India. We being a domestic manufacturer should have an advantage. So is my understanding correct? If there is a requirement, say within next 1 year, we have to supply 15-20 shuttle cars and 15-20 roof bolters. Can EIMCO deliver that? Do we have the capacity? Do we have the timelines, like time-bound timelines? Can we do that? That is question number one, sir. Question number two is, there are like 145, 150 underground active mines, and I believe we will be supplying to most of them, at least our semi-mechanized, like intermediate mining products like LHD, SDL. So if you can give a rough number, do we supply to 70% of those active underground mines? That will also be okay. My more important question is, sir, similarly for continuous miner package products. So there are 3-4 products that we supply. Um how many of these underground minings have at least one of their products? Is it like 10 mines, 20? And where do you see this number in the next 2-3 years? Can we supply at least one product to at least 50 to 100 mines in the next 2-3 years? Is this the target? Like LHD, SDL is present in so many mines. So can we supply at least one product which is very well established? Because for the full package might take time, but at least one product if we can supply. So final question is on the, one clarity. You talked about one of our continuous miner is undergoing testing and will be deployed in next 2-3 months. But sir, we had two such orders for continuous miner package. So is the second one also undergoing trials and will be deployed in underground mines in the next 2-3 months? Can you talk about that? Yeah, final question and a suggestion was, sir, on the export side, sir. So we have a very good product as per the industry feedback in roof bolter and shuttle cars, which is very well established, and there is very good demand from our product. So, sir, instead of because the final continuous miner mother machine will take 1-2 years to get fully established. So, sir, instead of waiting for that to happen, can't we start exporting at least our roof bolter and shuttle car? Because I believe China imports 50 to 100 roof bolters every year. 800 to 1000 continuous miner packages demand is there all across the world. So if we can try to form a strategy to start exporting the products which is already established, like roof bolters and shuttle cars. And what is your target in terms of exports? Say, can exports be 10 to 20% of our sales in the next 2-3 years? So, sir, these 3-4 questions, if you can answer them, that will be very helpful. Thank you.
Yeah. So first of all, about the production capacity, what I said 5-6 is based on the today's production capacity blocked within the group for EIMCO right now. Otherwise, if we take the group capacity and our group chairman is here in the meeting, and if he releases little more production capacity, we can meet India's total demand for continuous miner package without any doubt. So the capacity of manufacturing is not a big constraint for us. The deliveries also, once we are coming to the market, it will change. Means we will change the delivery pattern also. We can very well affect that part of the, say, marketing thing. And as far as you are right, we are supplying two continuous miner together. Both of them will be there in the customer, but customer's phase will be ready for the first one early, and then the second one will go. However, the dispatch will be completed within this month for both the continuous miners. Your other questions related to the selling to the in part to all the customers. Yes. Today I can say that there is hardly any, I don't think there is exception also that there is a coal mine in India and it is not having at least one of our product working there. And we'll do the same and we'll maintain the same in the future also. So almost all the people in the coal mining segment are our customer, be it private, be it government, be it state government. And I think the one more query was regarding the export. These machines, as you know, the regulatory requirement, we right now are meeting the regulatory requirement of India, and once it is, right now we are busy with getting them all cleared and resolving the teething issues here. However, at the same time, yes, the export potential is there, and we are addressing it also, and we are having the ambition of that, and there is work going on in that direction also for this product to be exported. However, I will correct, the world market of continuous miner is not 800 numbers. It is significantly lower. Thank you.
And the another speaker available with us is Ankit Gupta.
Yeah, am I audible? Yeah, yeah. So thanks for the opportunity. So most of my questions have been answered. I think two, three, four questions on the continuous miner itself. So, sir, on the roof bolter, I think whatever feedback we have from the industry, it is a very established product, and we seem to have a decent market share. So, let's say if we in FY25 sales of around 50 crores, can we say that 80 to 85% of our sales in the continuous miner components happen from roof bolter only? And in FY25, out of the roof bolter sold in the country, what will be our market share? Let's say, there were like 30, 40 roof bolters deployed in underground mines in FY25. What will be our market share in that? Uh, Second, on the shuttle car, I think what we understand from the industry feedback is that we had launched 550 kV shuttle car in FY20 in last year, and but the industry standard is of around 1100 kV. So have we also launched that model as well? And what I think Philips Global is the most established player in the Indian shuttle car industry. So if you can compare our performance with them, and like roof bolter, can shuttle car also become a very successful product for us, like roof bolter in FY26 and FY27? On the continuous miners, you said that we have got DGMS approval, but sir, I think there is some requirement for Coal India and its subsidiaries. The one approval is also required when we establish our operations, and we supply, let's say, and we are able to mine, let's say, somewhere around 1 lakh metric ton per annum. So will this approval come only after few months of deploying this, or it will take almost a year to get the approval? And once that is done, do you expect significant traction in our continuous miner machines over the next year or so? And as you have already mentioned that we have got entire package, sold to our customers. So let's say, this continuous miner machine gets established, and roof bolter and feeder breaker also, has a decent performance. Can we expect that, we'll start getting more package orders for the entire continuous miner package in the next, let's say by end of FY26 to 27? I think those were my questions.
Yeah, the technical question you have asked, that the first shuttle car we gave to the customer based on their demand at 550 volt, and there was a problem in little problem in the operation, though it is working even today with that, and it has produced in comparison to any other shuttle car the same productivity. So, but still we are changing it to 1.1 for our customer. And the remaining shuttle cars supplied in the market are 1.1 kV only. And as far as the package, say anticipation is, yes, we are anticipating more package order from the market. And particularly right now, either in Make in India segment we'll get, or we will get in from the private customer. Your question is right that till we do not complete 1 year of the operation and produce minimum 0.36 million ton of the coal through our continuous miner, the Coal India guideline for the hiring of continuous miner will not be qualified by our machine. Therefore, there is restriction on that. And therefore, we are working that our machine is deployed at the earliest and we complete that phase of, say, the qualification also. So thank you. I believe I have replied all your queries.
Another speaker is Yachna Bhatia.
Hi, I'm audible?
Yeah.
Yeah. So most of my questions are answered, just a few left. One regarding this CM product, I just wanted to understand what is your right to win with them, because this is a product in which if there is downtime, then it is very, very expensive for the contractor, and therefore your customer has to be very convinced about the output, about the quality, about the service. So if you could expand on this aspect and maybe specifically talk about what output of coal per month are you expecting from your CM? How does it compare to, what competition is offering? Second question is, can you talk about the expected decline in your traditional business with this blast-free technology? So if it is at a X number today, say if I'm looking at 3 or 5 years down the line, would this still continue to be 70 to 80% of X, or would you expect it to go even lower? And my third question is regarding the margins part of it that we had covered earlier. But given the fact that this technology is more advanced, and you expect gross margins to be higher than where you are today, and there is operating leverage in the business, why would you still say that margins would remain in the range of 18-20% and at a EBITDA level and not go higher 25% plus types? That's it. Thank you.
Yeah, so you asked about this margin issue. I will first address that. As I have already told, different products have got different margins. Particularly the construction market, when we are growing, we have to set off the higher margin of the other product. So when we are saying that we are talking about the total margin. The other thing is that this market of continuous miner, as you said, yes, in our total product, continuous miner segment or the underground, in the underground machinery, the continuous miner segment will be more predominant. Its share will increase. But how much, it depends upon the Coal India, that how fast they will be closing the conventional machines run mine and convert them into continuous miner. So in fact, our two products are competing with each other at the customer front. And it is the customer's execution which will decide. And we love both the products. So we do not affect that, and we cannot affect that. There are technical issues in the mining also, which may allow our conventional products to sustain for longer time till somebody comes with the solution or we come with the solution for our customers. So I believe that I have replied to your queries.
The another speaker is Rakesh Patel. Sir, please unmute yourself.
Hello. Thank you for the opportunity, sir. My first question is, sir, what proportion of CMP raw material is planned to be procured domestically versus dependence on imports? The second question is, what we understand is almost 50% of CMP equipment cost is also spent in terms of spare parts and service uptime over 10-15 years of life of CMP. So, what would be our marketing strategy there? We can gain much better market share compared to peers because of our domestic presence. So, if you can throw some light on that. And sir, third question is, what we also understand is most of the CIL mines operating right now underground, less than say 2 million tons, are currently making operating level losses, and that will prohibit the commercial miners to come in and scale their own CMP. So, what are your thoughts on this, sir? That's all from my side, sir. Thank you.
In our continuous miner, we have done indigenization to the maximum. We will be qualifying this class 1 indigenous equipment set by the Make in India of the Government of India. So that says that around 50%, more than 50% of the value addition. So any product which is either manufactured within our group, which is manufactured by anybody in India of the good quality, we have used local, and we have gone out only for the extremely difficult product or which is not manufactured in India. And we'll be doing so. And we'll be making more and more indigenous machine based on the domain expertise within our group. And we'll explore within the country also. Yes, we have got the edge over competitor on supplying the spares and the other services promptly because we are local and our manufacturing base is also local. The sourcing is also local. So that will give us advantage, and the spare consumption is not 50%, it is wrong. But yes, there will be significant spare consumption in the continuous miner packages. So that will generate spare business for us. Your last question was regarding the Vishal, can you remind me? The last question was not for CM.
Can we get back?
The next speaker available with us is
Mr. We are allowing Rakesh Patel to rejoin. Please.
Yeah.
Rakesh bhai, please repeat your last question, please.
Thank you for the opportunity. So my last question is that at what production level does the mine becomes break even or profitable? Because what we hear in terms of underground, because what we hear from the industry is that all the CIL mines which are underground right now are operating level loss making, which will prevent the commercial miners to come up in underground mining meaningfully. So is there any some sort of break-even point where I understand it is very subjective depending on gradient of mine and seams, but a rough ballpark figure at what level does it makes commercially viable sense to go underground for a commercial miner?
Nothing of that sort is available, very frankly, and the underground mine is viable based on the coal prices, which varies right from say 4,000 rupees a ton to 15,000 rupees a ton. So normally, many of the coal mines, underground coal mines, operated by the Coal India, even at the larger scale, are under the loss, and that is true. However, the private miners, they are keeping their economics right, and I don't think that is any hindrance for going underground or for expansion of the underground commercial production. And many of the mines, right from the beginning, are now planned for the underground operation only. Particularly keeping the coal prices, the vicinity of the coal consumption, which are the external factor to the mining itself. And definitely the condition of the mine plays a very vital role in that. So that is just before they take the call for mining the underground.
The next speaker available with us is Yashvi Kothari. Madam, you need to unmute yourself.
Emir bhai, can we allow to next speaker to speak?
Yes, sir, yes. The next speaker available with us is Vanil Desai.
Good morning, everyone. Am I audible?
Yes.
Yes.
Yeah. So, sir, only three incremental questions. So, one is, as you said, that Coal India is planning to deploy 100 to 125 CM over next 5 years. Now, as you said, that whatever that we have supplied will probably have some teething issues that everybody else also has, and there is a qualifying requirement. So that entire process may take, let's say, 1-2 years. And considering that already there is a lead time of 18 to 24 months for CM packages, whatever that we can target in terms of the demand. Probably, people who are planning for FY28 would already have or started ordering. So, in this 5 year period available, because this qualification process will take 1 or 2 years, will we lose a significant part of the market share because somebody else would already have been qualified and the CMs are working? So that's the one question, and how do we address that part? Second, sir, in the roof bolter, I think was the first product which kind of we established, and it is very well accepted in the market. Now, compared to somebody like James Fletcher, our price is significantly better. So, given that the product is well established and we have a price advantage, can we, think about getting a very high market share in roof porter part, at least where our product is well proven now. So that is the second question. And the third question is, existing products on the intermediate mining, whatever 68, 70 crore number that we did, in FY25, how should we look at this number, let's say 2 years, 3 years out? Will it be 50% of this number or will it be 70% of this number? Because that's the base business with which we are working, right? So if you can give some sense onto it, how you guys are looking at it. So these are the three questions.
Yeah, you are right that there will be time taken, but what I said is only for the Coal India contracts, and 120 number projected by Coal India is including private players and different methods. It is not all on the hiring. So the market is not closed for us. and not all will wait for those qualification criteria of the Coal India. So we are hoping that once we prove in the market the performance of our machine, the market will be open and we may not have to wait for that long. However, since we are the late entrant, our competitors are already there in the market. So they also will be doing their bit for gaining their market share. So once proven, yes, market share will be very clear and easier for us. Other thing about this other machines are already in the market. There is no binding by the Coal India for uses of those machines. They are already working in the Coal India contracts and Coal India mines. So we will be pushing all those things separately also out of the package offer. So that will be our strategy for the, say, near term.
There are no further speaker, so you can move forward to the proceedings of the.
Go ahead, Rikin.
Yeah. So in question answer chat, we have received a similar kind of questions that we have addressed already to the shareholders. So now I request Chairman sir to commence the remaining proceedings from the AG.
Since there are no other questions, no other matters to be discussed, I declare the meeting is concluded at 11:15 a.m. Thank you. Thank you, everybody.
Thank you, sir.
Thank you, Mr. Chairman.
Thank you. Thanks.
Thank you.
Thank you all.
Thank you.
Participation. I would also like to thank our board members, auditors, and all the employees for their dedication and hard work. Thank you once again, and we look forward to your continued association with EIMCO ELECON India Limited. I declare the meeting as concluded. Thank you.
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 We have